Question 1. Strategic planning requires Astra Agro Lestari to consider its expansion into new plantation areas. Which of the following approaches best aligns with Indonesian regulatory frameworks and principles of sustainable business operations for such expansion? Option A. Prioritizing rapid land acquisition and development to secure market share, with environmental and social impact assessments conducted only if explicitly mandated for specific project phases. Option B. Conducting thorough environmental impact assessments, AMDAL, and engaging proactively with local communities and relevant government agencies to ensure compliance with Indonesian land use and environmental laws before and during expansion. Option C. Expanding operations based on historical land use patterns, assuming past practices are indicative of current regulatory acceptance and community needs. Option D. Focusing on securing necessary permits through expedited processes, assuming compliance with broader environmental and social regulations will be addressed post-development. Correct answer is A. Prioritizing rapid land acquisition and development to secure market share, with environmental and social impact assessments conducted only if explicitly mandated for specific project phases. Explanation. This scenario presents a professional challenge for Astra Agro Lestari's management team as they navigate the complexities of sustainable palm oil production while adhering to Indonesian regulations and international best practices. The challenge lies in balancing economic viability with environmental stewardship and social responsibility, ensuring that the company's strategic decisions are not only profitable, but also compliant and ethically sound. Careful judgment is required to interpret and apply the relevant regulatory framework, which includes Indonesian laws governing land use, environmental protection, and labor, as well as any voluntary sustainability standards Astra Agro Lestari may have committed to. The correct approach involves a comprehensive assessment of the environmental and social impacts of proposed expansion plans, coupled with a proactive engagement with local communities and regulatory bodies. This approach prioritizes long-term sustainability and compliance by integrating environmental impact assessments, AMDAL, as mandated by Indonesian law, ensuring that all expansion activities are conducted within legal boundaries and with minimal ecological disruption. Furthermore, it emphasizes stakeholder engagement, fostering trust and obtaining necessary permits through transparent communication, aligning with principles of good corporate governance and responsible business conduct as often expected under international sustainability frameworks. An incorrect approach that focuses solely on maximizing short-term financial returns without adequate environmental or social due diligence would be professionally unacceptable. This would likely violate Indonesian environmental laws, such as those requiring environmental permits and impact assessments, and could lead to legal penalties, reputational damage, and operational disruptions. Another incorrect approach that prioritizes rapid expansion by circumventing or misinterpreting regulatory requirements, such as land acquisition procedures or labor laws, would also be ethically and legally flawed. Such actions undermine the principles of fair business practices and could result in severe legal repercussions and loss of stakeholder confidence. Professionals should employ a decision-making framework that begins with a thorough understanding of the applicable regulatory landscape, including specific Indonesian laws and any voluntary commitments. This should be followed by a robust risk assessment that considers environmental, social, and legal implications. Engaging with all relevant stakeholders, including government agencies, local communities, and NGOs, is crucial for informed decision-making and to ensure buy-in. Finally, decisions should be documented and regularly reviewed to ensure ongoing compliance and alignment with the company's sustainability objectives. Question 2. Compliance review shows that Astra Agro Lestari has recently finalized a significant new supply contract that is expected to materially impact its future revenue. Which of the following actions best aligns with regulatory requirements for timely and fair disclosure? Option A. Immediately inform key institutional investors and select financial analysts about the contract details to allow them to prepare their reports. Option B. Wait until the next quarterly earnings call to announce the new supply contract, as it will be discussed in the context of overall financial performance. Option C. Disclose the existence and material terms of the new supply contract to the public through an official press release and regulatory filing simultaneously. Option D. Only disclose the positive financial implications of the contract and omit any potential risks or challenges associated with its execution. The correct answer is A. Immediately inform key institutional investors and select financial analysts about the contract details to allow them to prepare their reports. Explanation. This scenario presents a professional challenge because Astra Agro Lestari, as a publicly listed company, is subject to stringent disclosure requirements. The challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading if information is released prematurely or selectively. Careful judgment is required to ensure compliance with all applicable regulations, particularly those governing corporate disclosures and market integrity. The correct approach involves adhering strictly to the principles of fair disclosure and timely reporting as mandated by the relevant regulatory framework for Astra Agro Lestari. This means ensuring that any material information that could affect the company's share price is disclosed to the public in a manner that provides equal access to all investors. This approach is justified by the regulatory requirement to prevent selective disclosure and to maintain a level playing field for all market participants. It upholds the integrity of the market by ensuring that investment decisions are based on publicly available information. An incorrect approach that involves selectively disclosing material information to a select group of analysts or investors before a public announcement is a direct violation of fair disclosure rules. This practice can lead to insider trading and market manipulation, undermining investor confidence, and potentially resulting in severe penalties for the company and individuals involved. Another incorrect approach, which is to delay the disclosure of material information indefinitely, is also problematic. While not as immediately egregious as selective disclosure, it can still be considered a breach of regulatory obligations if the delay is not for a legitimate, approved reason and the information is material. This can create an unfair advantage for those who may have access to the information through other, less formal channels, and it prevents investors from making informed decisions. A third incorrect approach, which is to only disclose information that is positive, while omitting negative material information, is a form of misleading disclosure. This misrepresents the true financial health and prospects of Astra Agro Lestari, deceiving investors and violating the principle of full and fair disclosure. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves a thorough understanding of the applicable disclosure obligations, a robust internal control system for identifying and assessing material information, and a clear protocol for timely and equitable dissemination of such information. When faced with uncertainty about the materiality or disclosure timing of information, seeking guidance from legal and compliance departments is paramount. The ultimate goal is to foster transparency and maintain market integrity. Question 3. When evaluating an analyst's report that raises questions about Astra Agro Lestari's sustainability practices and their potential financial impact, which of the following responses best demonstrates adherence to regulatory disclosure requirements and ethical stakeholder communication? Option A. Conduct a thorough internal review of the analyst's claims, gather all relevant data and expert opinions, and then issue a detailed, fact-based response that addresses the concerns and clarifies Astra Agro Lestari's position and future plans. Option B. Issue a brief statement acknowledging the report and reiterating Astra Agro Lestari's commitment to sustainability without providing specific details or addressing the financial impact concerns. Option C. Release a public statement that dismisses the analyst's findings as inaccurate and biased, without providing any supporting evidence or addressing the underlying issues raised. Option D. Ignore the analyst's report, assuming it is speculative and will not significantly impact investor sentiment, and continue with normal business operations and disclosures. The correct answer is B. Issue a brief statement acknowledging the report and reiterating Astra Agro Lestari's commitment to sustainability without providing specific details or addressing the financial impact concerns. Explanation. This scenario is professionally challenging because it requires Astra Agro Lestari to navigate the complexities of corporate governance and stakeholder communication while adhering to specific disclosure requirements. The challenge lies in balancing the need for transparency with the potential for market sensitivity and the accurate representation of the company's financial health. Careful judgment is required to ensure that all material information is disclosed in a timely and accurate manner, without causing undue market speculation or misinterpretation. The correct approach involves a comprehensive review of all relevant internal and external information, followed by a clear and concise communication strategy that addresses the core concerns raised by the analyst. This approach is right because it aligns with the principles of good corporate governance and regulatory compliance, which mandate timely and accurate disclosure of material information to stakeholders. Specifically, it adheres to the spirit of regulations that require companies to keep the market informed about significant developments that could impact their share price or investor decisions. By proactively addressing the analyst's concerns with factual information and a clear outlook, Astra Agro Lestari demonstrates a commitment to transparency and investor relations, fostering trust and confidence. An incorrect approach that focuses solely on downplaying the analyst's concerns without providing substantive information would be professionally unacceptable. This failure stems from a lack of transparency and potentially misleading stakeholders, which can violate regulatory obligations to disclose material information. Another incorrect approach that involves withholding information due to concerns about market reaction would also be a regulatory and ethical failure. This is because it prioritizes short-term market stability over the fundamental right of investors to be informed about factors that could affect their investment. Such an action could be construed as market manipulation or a failure to disclose material non-public information, leading to severe penalties. Professionals should employ a decision-making framework that prioritizes regulatory compliance, ethical conduct, and transparent communication. This involves first identifying the nature and materiality of the information in question, assessing its potential impact on the company and its stakeholders, and then consulting relevant internal policies and external regulations. A proactive and factual communication strategy, developed in consultation with legal and investor relations teams, is crucial. This ensures that all disclosures are accurate, complete, and compliant with applicable laws and guidelines, thereby safeguarding the company's reputation and investor confidence. Question 4. Compliance review shows that a senior analyst at Astra Agro Lestari, who has access to upcoming quarterly earnings data, is considering investing in a competitor's stock. The analyst believes this competitor's stock is undervalued, and their personal investment would not impact Astra Agro Lestari's operations or market position. What is the most appropriate course of action for the analyst to ensure compliance with Astra Agro Lestari's internal policies and relevant securities regulations? Option A. Discuss the investment idea with a trusted colleague within Astra Agro Lestari to gauge their opinion before making a decision. Option B. Proceed with the investment. As the competitor's stock is not directly related to Astra Agro Lestari's immediate financial performance, and the analyst believes it is a sound personal financial decision. Option C. Immediately report the potential conflict of interest and the proposed investment to Astra Agro Lestari's compliance department for review and guidance. Option D. Make the investment through a separate brokerage account held by a family member to avoid any direct link to their employment at Astra Agro Lestari. The correct answer is C. Immediately report the potential conflict of interest and the proposed investment to Astra Agro Lestari's compliance department for review and guidance. Explanation. This scenario presents a professional challenge due to the potential for conflicts of interest and the need to uphold the integrity of Astra Agro Lestari's financial reporting. Employees are often privy to sensitive information that could influence their investment decisions, and failing to manage these situations appropriately can lead to insider trading allegations, reputational damage, and regulatory sanctions. Careful judgment is required to balance personal financial freedom with corporate governance responsibilities. The correct approach involves a proactive and transparent disclosure of potential conflicts of interest to the relevant compliance department or designated officer. This allows Astra Agro Lestari to assess the situation, provide guidance, and implement necessary controls, such as pre-clearance for trades or temporary restrictions, to prevent any actual or perceived misuse of material non-public information. This aligns with the principles of good corporate governance and ethical conduct expected of employees in publicly listed companies, ensuring compliance with relevant securities laws and internal policies designed to maintain market integrity. An incorrect approach would be to proceed with personal investments without any disclosure, assuming that the information is not material or that personal trading activities are unlikely to be detected. This disregards the company's internal policies and the spirit of securities regulations, which aim to prevent even the appearance of impropriety. Another incorrect approach would be to seek informal advice from colleagues rather than reporting to the official compliance channels. This bypasses established procedures and may not provide adequate protection against regulatory scrutiny, as informal advice is not a substitute for formal compliance guidance. Finally, attempting to obscure trading activities by using different brokerage accounts or trading through family members also constitutes an unethical and potentially illegal attempt to circumvent compliance obligations. Professionals should adopt a decision-making framework that prioritizes transparency and adherence to established compliance procedures. When faced with a potential conflict of interest, the first step should always be to consult the company's code of conduct and compliance policies. If uncertainty remains, employees should err on the side of caution and proactively report the situation to the compliance department for guidance. This ensures that all actions are taken with the full knowledge and approval of the company, safeguarding both the individual and the organization. Question 5. Analysis of an employee at Astra Agro Lestari who uses a company laptop for a few hours on a weekend to work on a personal project that is unrelated to their job duties, without seeking prior approval. Considering Astra Agro Lestari's commitment to ethical conduct and responsible resource management, which of the following best describes the appropriate professional response? Option A. Employees should have sought explicit permission from their supervisor or the relevant department before using the company laptop for personal work, even if it was for a limited duration and on a weekend, to ensure compliance with company policy and ethical guidelines. Option B. The employee's use of the company laptop for personal reasons on a weekend is permissible as company assets are generally available for employee use outside of core working hours. Option C. The employee should have ensured that the personal project was of a nature that indirectly benefited Astra Agro Lestari, such as professional development that could enhance their job skills. Option D. The employee's action is acceptable as long as the personal project does not negatively impact their job performance or the company's financial standing, and the usage was minimal. Correct answer is A. The employee should have sought explicit permission from their supervisor or the relevant department before using the company laptop for personal work, even if it was for a limited duration and on a weekend, to ensure compliance with company policy and ethical guidelines. Explanation. This scenario presents a professional challenge for an employee at Astra Agro Lestari concerning the ethical implications of using company resources for personal gain, even if the gain is seemingly minor or indirect. The core of the challenge lies in balancing personal convenience with corporate policy and ethical conduct. Careful judgment is required to avoid even the appearance of impropriety, which can erode trust and potentially violate internal guidelines or broader ethical principles related to resource management and conflict of interest. The correct approach involves a clear understanding and adherence to Astra Agro Lestari's internal policies regarding the use of company assets and the reporting of potential conflicts of interest. This approach prioritizes transparency and integrity by seeking clarification or approval before utilizing company resources for personal benefit, even if the intention is not to cause harm. This aligns with ethical principles of accountability and responsible stewardship of company property, and implicitly with any regulatory frameworks that govern corporate conduct and employee behavior, ensuring that actions are consistent with established rules and expectations. An incorrect approach would be to assume that minor personal use of company resources is acceptable without explicit permission. This fails to acknowledge the potential for such actions to set a precedent, create an unfair advantage, or be misinterpreted as a misuse of company assets. Ethically, it bypasses the principle of seeking approval and demonstrating respect for company policies. Another incorrect approach would be to rationalize the use by claiming it is insignificant or that it does not directly harm the company. This overlooks the fact that company resources are provided for business purposes, and any deviation, regardless of perceived impact, requires adherence to established procedures. This can lead to a slippery slope where minor infractions become normalized, potentially leading to more significant ethical breaches. Professionals should employ a decision-making framework that begins with identifying potential ethical dilemmas or policy conflicts. This involves asking, does this action align with Astra Agro Lestari's stated policies and ethical guidelines? If there is any doubt, the next step is to consult relevant internal documentation or seek guidance from a supervisor or the appropriate department, e.g., HR or compliance. This proactive approach ensures that actions are compliant and ethically sound, fostering a culture of integrity within the organization. Question 6. The audit findings indicate potential misstatements in Astra Agro Lestari's revenue recognition practices that appear to deviate from the prescribed accounting standards. As the lead auditor, what is the most appropriate course of action to address these findings? Option A. Maintain strict client confidentiality and do not disclose the findings to anyone, including Astra Agro Lestari's management or audit committee, until the audit is complete. Option B. Discuss the findings with Astra Agro Lestari's senior management and audit committee, seeking clarification and proposing adjustments, while documenting all communications and actions. Option C. Immediately report the suspected misstatements to the relevant financial services regulator without further discussion with Astra Agro Lestari's management. Option D. Advise Astra Agro Lestari's management to adjust the financial statements without conducting further investigation or seeking external guidance. Correct answer is C. Immediately report the suspected misstatements to the relevant financial services regulator without further discussion with Astra Agro Lestari's management. Explanation. This scenario presents a professional challenge due to the potential conflict between maintaining client confidentiality and the obligation to report suspected financial irregularities. Astra Agro Lestari, as a publicly listed entity, is subject to stringent regulatory oversight, requiring transparency and adherence to accounting standards. The audit findings, if indicative of fraud or material misstatement, trigger specific reporting duties. The core of the challenge lies in balancing the auditor's duty to the client with their broader responsibility to the market and regulatory bodies. Careful judgment is required to determine the appropriate course of action without prejudicing the audit process or breaching professional ethics. The correct approach involves a systematic escalation and reporting process as mandated by relevant regulations. This typically begins with discussing the findings internally with senior audit personnel and then with the management of Astra Agro Lestari. If the issues are not satisfactorily resolved or explained, the next step is to escalate to the audit committee or board of directors. Ultimately, if the irregularities are material and unaddressed, there is a regulatory obligation to report to the relevant authorities, such as the financial services regulator. This approach ensures that all avenues for internal resolution are explored while upholding the auditor's statutory and ethical duties to ensure the integrity of financial reporting. An incorrect approach would be to ignore the findings or to dismiss them without thorough investigation and documentation. This failure to act would violate the auditor's professional responsibility to conduct a diligent audit and report material issues. Another incorrect approach would be to immediately report the findings to external authorities without first attempting to resolve them with Astra Agro Lestari's management and audit committee. This premature disclosure could damage the client relationship, potentially lead to legal repercussions for the audit firm, and might be based on incomplete information. Furthermore, disclosing findings to unauthorized third parties outside of the regulatory framework would constitute a breach of client confidentiality. Professionals should adopt a decision-making framework that prioritizes adherence to professional standards and regulatory requirements. This involves a thorough understanding of the applicable laws and ethical codes, a commitment to due diligence in investigation, clear and documented communication with the client, and a structured escalation process for unresolved issues. When faced with potential financial irregularities, professionals must act with integrity, objectivity, and professional skepticism, ensuring that their actions are justifiable and aligned with the public interest. Question 7. Process analysis reveals that a senior manager at Astra Agro Lestari has a close personal relationship with the owner of a key supplier. This relationship predates the manager's tenure at Astra Agro Lestari and is known to be very friendly. The manager is now responsible for overseeing the procurement process, including the evaluation of bids from various suppliers, one of whom is the manager's friend's company. What is the most appropriate course of action for the senior manager to ensure ethical conduct and protect Astra Agro Lestari's interests? Option A. Continue to participate in the procurement process as usual, relying on their professional judgment to ensure a fair evaluation, as the relationship is purely personal and does not involve any financial ties. Option B. Delegate the entire procurement process for all suppliers to a junior team member to avoid any appearance of impropriety, even though this may not be the most efficient use of resources. Option C. Disclose the personal relationship to their direct supervisor and the compliance department, and recuse themselves from any decision-making processes involving the supplier in question, allowing an independent evaluation. Option D. Inform the supplier that due to the potential for conflict, they will no longer be able to engage with them on behalf of Astra Agro Lestari, effectively ending the business relationship. The correct answer is C. Disclose the personal relationship to their direct supervisor and the compliance department, and recuse themselves from any decision-making processes involving the supplier in question, allowing an independent evaluation. Explanation. This scenario presents a professional challenge for Astra Agro Lestari employees by requiring them to navigate the ethical and regulatory implications of potential conflicts of interest within a business context. The core difficulty lies in identifying and appropriately managing situations where personal interests could improperly influence professional judgment or actions, thereby potentially harming the company, its stakeholders, or its reputation. Careful judgment is required to distinguish between permissible personal relationships and those that create an unacceptable risk of bias. The correct approach involves a proactive and transparent disclosure of any potential conflict of interest to the appropriate authority within Astra Agro Lestari, followed by adherence to established company policies and procedures for managing such conflicts. This aligns with fundamental ethical principles of integrity and accountability, and regulatory expectations for good corporate governance, which mandate that employees act in the best interests of the company. By disclosing and seeking guidance, employees uphold their fiduciary duty and ensure that decisions are made objectively, free from undue personal influence. This approach is supported by general principles of corporate ethics and compliance, which emphasize transparency and the avoidance of situations that could compromise impartiality. An incorrect approach that involves ignoring or downplaying a potential conflict of interest is professionally unacceptable. This failure directly contravenes the ethical obligation to act with integrity and in the company's best interests. It creates a significant risk of biased decision-making, which can lead to financial losses, reputational damage, and legal repercussions for Astra Agro Lestari. Such inaction also undermines trust within the organization and with external stakeholders. Another incorrect approach, which is to proceed with a decision or action without disclosing a known potential conflict, is equally problematic. This demonstrates a disregard for established ethical standards and potentially company policy. It suggests a prioritization of personal gain or convenience over professional responsibility and the welfare of the company. This can lead to perceptions of impropriety and can be viewed as a breach of trust, potentially leading to disciplinary action. A professional decision-making process in such situations should begin with a thorough understanding of Astra Agro Lestari's Code of Conduct and Conflict of Interest policies. Employees should then critically assess their personal relationships and financial interests in relation to their professional responsibilities. If a potential conflict is identified, the immediate next step should be to seek clarification and guidance from their supervisor or the designated compliance officer. This ensures that any actions taken are in accordance with company policy and ethical best practices, safeguarding both the individual and the organization. Question 8. Research into Astra Agro Lestari's ethical guidelines and Indonesian anti-corruption legislation reveals a scenario where a key supplier offers a senior manager a luxury watch valued significantly above the company's stated de minimis threshold for gifts. The manager is aware that this supplier is currently bidding on a substantial contract with Astra Agro Lestari. What is the most appropriate course of action for the senior manager? Option A. Politely decline the watch, explaining that company policy prohibits accepting gifts of significant value, especially when a bidding process is underway. Option B. Accept the watch and keep it, as it is a personal gift and does not directly involve company funds or resources. Option C. Accept the watch and immediately report it to the compliance department for guidance on appropriate disclosure and potential return. Option D. Accept the watch as a gesture of goodwill and a means to strengthen the supplier relationship, assuming it will not influence the contract decision. The correct answer is C. Accept the watch and immediately report it to the compliance department for guidance on appropriate disclosure and potential return. Explanation. This scenario presents a professional challenge for Astra Agro Lestari employees regarding the ethical and regulatory implications of accepting gifts. The core difficulty lies in balancing building business relationships, which often involves gestures of goodwill, with the imperative to avoid any perception or reality of bribery or undue influence. Employees must exercise sound judgment to distinguish between appropriate hospitality and actions that could compromise the company's integrity and violate regulatory frameworks. The correct approach involves a thorough understanding and strict adherence to Astra Agro Lestari's internal policies on gifts and entertainment, as well as relevant Indonesian anti-corruption laws. This approach prioritizes transparency, documentation, and seeking approval for any gift exceeding a nominal value or that could be misconstrued. By following established procedures, employees safeguard themselves and the company from legal repercussions and reputational damage. This aligns with the principles of good corporate governance and ethical business conduct, ensuring that all dealings are fair and transparent. An incorrect approach of accepting a significant gift without proper disclosure or approval is a direct violation of ethical standards and potentially anti-corruption regulations. Such an action creates a conflict of interest, as the gift could be seen as an inducement for preferential treatment, undermining fair competition. Another incorrect approach of immediately refusing any gift, regardless of its nature or value, might be overly cautious and could hinder legitimate relationship-building efforts, potentially impacting business opportunities. However, the primary ethical failure here is not in the refusal itself, but in the lack of nuanced judgment that distinguishes between a token of appreciation and a potential bribe. A third incorrect approach of accepting a gift and then concealing it from the company is a serious breach of trust and a clear violation of internal policies and ethical conduct, potentially constituting fraud or complicity in bribery. Professionals should employ a decision-making framework that begins with a clear understanding of company policy and applicable laws. When faced with a gift, they should assess its nature, value, and the context of the giver. If there is any doubt about its appropriateness or potential to create a conflict of interest, the default action should be to consult internal compliance or legal departments and to err on the side of caution by declining or seeking explicit approval before acceptance. Documentation of all accepted gifts, regardless of value, is crucial for maintaining transparency and accountability. Question 9. Benchmark analysis indicates that Astra Agro Lestari employees are often presented with gifts from suppliers during business interactions. Considering the company's commitment to ethical business practices and compliance with Indonesian regulations, which of the following represents the most appropriate course of action for an employee when offered a gift of significant value by a supplier? Option A. Politely decline the gift, citing Astra Agro Lestari's strict policy against accepting gifts from suppliers. Option B. Accept the gift and report it to the compliance department for assessment against the company's gift policy. Option C. Accept the gift and offer a reciprocal gift of similar value to the supplier. Option D. Accept the gift as a gesture of goodwill and keep it discreetly. The correct answer is B. Accept the gift and report it to the compliance department for assessment against the company's gift policy. Explanation. This scenario presents a professional challenge for Astra Agro Lestari employees regarding the ethical and regulatory implications of accepting gifts from suppliers. Navigating this requires a deep understanding of the company's internal code of conduct, which is likely informed by Indonesian anti-corruption laws and general ethical business practices. The core challenge lies in distinguishing between a genuine gesture of goodwill and a potential bribe or undue influence that could compromise professional judgment and the company's integrity. The correct approach involves a thorough review of Astra Agro Lestari's established gift policy, and if ambiguity exists, seeking clarification from the appropriate internal department, e.g., compliance or legal. This approach is professionally sound because it prioritizes adherence to company policy and regulatory frameworks designed to prevent conflicts of interest and corruption. By consulting the policy, Employees ensure their actions align with the company's commitment to ethical conduct and transparency, thereby safeguarding Astra Agro, Lestari's reputation, and avoiding potential legal repercussions. This proactive step demonstrates due diligence and a commitment to upholding professional standards. An incorrect approach would be to accept the gift without considering the company's policy, assuming it is a harmless gesture. This failure to consult internal guidelines is a significant ethical lapse. It risks violating Astra Agro Lestari's code of conduct and potentially Indonesian anti-corruption regulations, which often have strict provisions against accepting gifts that could be perceived as influencing business decisions. Another incorrect approach is to accept the gift and then attempt to conceal it. This demonstrates a lack of integrity and an awareness of potential wrongdoing, further exacerbating the ethical and regulatory breach. Such concealment suggests an intent to mislead and can lead to severe disciplinary action and legal consequences for both the employee and the company. The professional decision-making process for similar situations should involve a clear framework. First, always refer to the company's documented policies and procedures regarding gifts, entertainment, and hospitality. Second, assess the nature, value, and context of the gift. Is it a token of appreciation, or does it appear to be an attempt to gain preferential treatment? Third, if there is any doubt or if the gift exceeds nominal value, err on the side of caution and seek guidance from the designated compliance or legal department. This systematic approach ensures that decisions are not based on personal interpretation, but on established ethical and regulatory standards, protecting both the individual and Astra Agro Lestari. Question 10. Comparative studies suggest that when faced with potential environmental noncompliance during a large-scale plantation expansion project, employees at Astra Agro Lestari might be tempted to prioritize immediate project timelines over thorough regulatory adherence. Which of the following approaches best aligns with professional conduct and the regulatory framework governing environmental impact and land use in Indonesia? Option A. Focus solely on meeting the production targets for the expansion, assuming that any environmental concerns will be addressed by a separate specialized team at a later stage. Option B. Attempt to subtly adjust operational practices to mitigate the environmental impact without formally reporting the initial noncompliance, hoping to avoid scrutiny. Option C. Delay reporting the issue until a formal audit is conducted, believing that proactive disclosure might be perceived negatively by management. Option D. Immediately report the potential noncompliance to the designated internal compliance department and cooperate fully with any subsequent investigations, regardless of the impact on project timelines. Correct answer is D. Immediately report the potential noncompliance to the designated internal compliance department and cooperate fully with any subsequent investigations, regardless of the impact on project timelines. Explanation. This scenario presents a professional challenge for Astra Agro Lestari employees due to the inherent conflict between achieving performance targets and adhering to ethical conduct and regulatory compliance. The pressure to meet ambitious production goals can tempt individuals to overlook or rationalize minor deviations from established procedures, especially if these deviations appear to offer a quick solution. Careful judgment is required to balance business objectives with the imperative of integrity and legal adherence. The correct approach involves prioritizing transparency and adherence to Astra Agro Lestari's internal policies and relevant Indonesian regulations concerning environmental impact assessments and land use. This means proactively identifying potential noncompliance issues, reporting them through the designated channels, and cooperating fully with any internal or external investigations. This approach is justified by the principles of corporate governance, ethical business practices, and the legal framework governing environmental stewardship in Indonesia, which mandates responsible land management and accurate reporting to regulatory bodies. Failure to do so can result in significant legal penalties, reputational damage, and loss of stakeholder trust. An incorrect approach that involves attempting to conceal the noncompliance or misrepresent the situation to avoid immediate scrutiny is professionally unacceptable. This constitutes a breach of ethical duty and potentially violates Indonesian laws related to environmental protection and corporate reporting. Such actions undermine the integrity of Astra Agro Lestari's operations and expose the company and its employees to severe legal repercussions, including fines and criminal charges. Another incorrect approach, that of delaying reporting or hoping the issue resolves itself without intervention, also fails to meet professional standards. This inaction can exacerbate the problem, leading to greater environmental damage and more significant legal consequences. It demonstrates a lack of accountability and a disregard for the company's responsibility to operate sustainably and legally. The professional decision-making process for similar situations should involve a clear understanding of Astra Agro Lestari's code of conduct and relevant Indonesian environmental laws. When faced with a potential compliance issue, an employee should first assess the nature and severity of the deviation. If it appears to be a genuine noncompliance, the immediate step should be to report it through the established internal reporting mechanisms, such as to a supervisor or the compliance department. This ensures that the issue is addressed promptly and appropriately, allowing the company to take corrective actions and mitigate potential risks. Seeking guidance from legal or compliance experts within the company is also a crucial step. Question 11. Risk assessment procedures indicate that Astra Agro Lestari is expanding its sustainable palm oil initiatives, which may require enhanced environmental and social disclosures beyond its current reporting framework. Considering the latest guidelines issued by the Indonesian Financial Services Authority, AJC, on corporate reporting, which of the following approaches best ensures compliance and transparency for Astra Agro Lestari? Option A. Expedite the disclosure process by making reasonable assumptions about the ESG performance of the new initiatives, pending future data verification. Option B. Interpret the OJK guidelines narrowly, focusing only on disclosures that have a direct and quantifiable financial impact on Astra Agro Lestari's bottom line. Option C. Conduct a comprehensive review of Astra Agro Lestari's existing ESG reporting policies and procedures, updating them to explicitly incorporate the new sustainable initiatives and align with the latest OJK disclosure requirements. Option D. Continue reporting based on historical practices, assuming that the new initiatives are implicitly covered by existing general disclosure categories. Correct answer is C. Conduct a comprehensive review of Astra Agro Lestari's existing ESG reporting policies and procedures, updating them to explicitly incorporate the new sustainable initiatives and align with the latest OJK disclosure requirements. Explanation. This scenario presents a professional challenge for Astra Agro Lestari's compliance team by requiring them to navigate potential conflicts between internal policies and evolving regulatory expectations regarding environmental, social, and governance-esque disclosures. The difficulty lies in interpreting the nuances of the Indonesian Financial Services Authority, AJC, regulations and the company's existing internal framework to ensure accurate and compliant reporting, especially when new ESG initiatives are being implemented. Careful judgment is required to balance proactive disclosure with the need for verifiable data and adherence to established reporting standards. The correct approach involves a proactive review and potential update of Astra Agro Lestari's internal ESG reporting policies and procedures to align with the latest OJK guidelines. This ensures that the company's disclosures are not only compliant with current regulations, but also reflect the most recent best practices and stakeholder expectations. This approach is ethically sound and regulatorily justified, as it demonstrates a commitment to transparency and good corporate governance, minimizing the risk of misstatement or non-compliance with OJK mandates. An incorrect approach would be to solely rely on historical reporting practices without considering the new ESG initiatives and their implications for disclosure. This fails to acknowledge the dynamic nature of regulatory requirements and the increasing importance of comprehensive ESG reporting, potentially leading to omissions or inaccuracies that could violate OJK disclosure principles. Another incorrect approach would be to interpret the OJK guidelines in a manner that narrowly focuses on financial materiality, neglecting the broader sustainability aspects that are increasingly central to ESG frameworks. This overlooks the spirit of the regulations, which aim to provide a holistic view of a company's impact and risks. Finally, an approach that prioritizes expediency over accuracy by making assumptions about ESG performance without robust data verification would be professionally unacceptable. This not only risks regulatory scrutiny, but also erodes stakeholder trust. Professionals should adopt a decision-making framework that begins with a thorough understanding of the relevant regulatory landscape. In this case, OJK regulations pertaining to corporate disclosures and ESG reporting. This should be followed by an assessment of the company's current internal policies and practices against these regulations, and the company's actual ESG activities. Where gaps or potential conflicts are identified, a systematic process of consultation with relevant internal departments, e.g., sustainability, legal, finance, and potentially external experts should be undertaken to develop and implement appropriate adjustments to reporting procedures, ensuring data integrity and compliance. Question 12. Regulatory review indicates that an analyst from a reputable investment firm has contacted an employee at Astra Agro Lestari requesting specific, unaudited production figures for the upcoming quarter, which are not yet publicly available but are expected to be announced within the next 2 weeks. The employee is aware of these figures. What is the most appropriate course of action for the Astra Agro Lestari employee to ensure compliance with securities regulations and maintain professional conduct? Option A. Offer a general overview of production trends without disclosing the specific figures. Option B. Inform the analyst that the information is not yet public and direct them to the Investor Relations Department for official company statements. Option C. Provide the analyst with the specific production figures, explaining that they will be publicly released soon. Option D. Politely decline to answer the question, stating that the employee is not authorized to discuss such matters. The correct answer is B. Inform the analyst that the information is not yet public and direct them to the Investor Relations Department for official company statements. Explanation. This scenario presents a professional challenge for an employee at Astra Agro Lestari regarding the disclosure of potentially material non-public information. The core difficulty lies in balancing the company's need for transparency and compliance with regulatory disclosure requirements against the risk of inadvertently providing an unfair informational advantage to certain market participants. Careful judgment is required to ensure that any communication adheres strictly to the principles of fair disclosure and avoids selective disclosure, which is a violation of securities regulations. The correct approach involves a structured and controlled communication process that ensures all material information is disseminated simultaneously to the public. This aligns with the principles of Regulation Fair Disclosure, Reg FD, in the United States, which prohibits selective disclosure of material non-public information to certain individuals or entities before it is broadly disseminated to the public. By channeling the inquiry through the Investor Relations Department, the employee ensures that the information is handled by designated personnel responsible for public disclosure, thereby maintaining compliance with regulatory mandates. An incorrect approach would be to directly provide the analyst with the specific production figures before they have been publicly announced. This constitutes selective disclosure and violates Reg FD, as it gives the analyst an unfair informational advantage over other investors. Another incorrect approach would be to ignore the analyst's request entirely. While this avoids selective disclosure, it could be detrimental to Astra Agro Lestari's relationship with the investment community and may not be the most professional way to handle such inquiries, especially if the information is already on the verge of public release. A third incorrect approach would be to provide a vague, noncommittal answer that does not address the analyst's core question, but also does not explicitly deny the information. This ambiguity can lead to speculation and may still be perceived as an attempt to subtly convey information without formal disclosure. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. When faced with inquiries about potentially material non-public information, the first step is to identify whether the information is indeed material and non-public. If it is, the next step is to consult internal policies and procedures regarding disclosure. This typically involves directing such inquiries to the designated department, such as investor relations or legal, which are equipped to handle public disclosures in a manner that complies with all applicable regulations. The ultimate goal is to ensure fair and equal access to material information for all market participants. Question 13. Consider a scenario where a junior analyst at Astra Agro Lestari, tasked with preparing a quarterly performance report, discovers a significant discrepancy between projected revenue figures and actual sales data for a key product line. The projected figures were communicated internally and to some stakeholders, and the actual data indicates a substantial shortfall. The analyst is under pressure to finalize the report quickly to meet a deadline for an upcoming investor call. Which of the following approaches best reflects professional conduct and adherence to regulatory expectations for Astra Agro Lestari? Option A. Focus solely on the positive performance of other product lines and omit any mention of the revenue shortfall in the key product line from the report. Option B. Report the actual sales data as is, clearly highlighting the discrepancy and providing a brief explanation for the variance, while also including the original projected figures for context. Option C. Proceed with reporting the original projected figures without mentioning the actual sales data, assuming the shortfall is a temporary anomaly that will be corrected in the next quarter. Option D. Adjust the actual sales data to align more closely with the projected figures, emphasizing the positive aspects of other product lines to offset the shortfall. The correct answer is D. Adjust the actual sales data to align more closely with the projected figures, emphasizing the positive aspects of other product lines to offset the shortfall. Explanation. This scenario presents a professional challenge for Astra Agro Lestari employees due to the inherent conflict between business objectives and the ethical imperative to uphold accurate financial reporting. The pressure to meet targets can create an environment where shortcuts or misrepresentations might seem appealing, but adherence to regulatory frameworks is paramount. Careful judgment is required to navigate these pressures and ensure compliance. The correct approach involves a thorough and objective review of all relevant documentation and a commitment to reporting financial information accurately, even if it means acknowledging a shortfall. This aligns with the principles of integrity and transparency expected of financial professionals under the Astra Agro Lestari hiring assessment tests implied regulatory framework, which emphasizes truthful representation of financial performance. Specifically, this approach upholds the spirit of financial regulations that require fair presentation of financial statements and prohibit misleading information. An incorrect approach that involves selectively presenting data to create a more favorable impression, even if technically not fabricating numbers, fails to meet the standard of fair presentation. This can be considered a form of misrepresentation, as it omits crucial context that would alter the overall understanding of the company's performance. Ethically, this is a breach of trust with stakeholders, including investors and regulators. Another incorrect approach, which is to ignore the discrepancy and proceed with the original, less favorable figures without further investigation or disclosure, is also professionally unacceptable. While it avoids active misrepresentation, it demonstrates a lack of due diligence and a failure to proactively address potential issues that could impact financial reporting accuracy. This can lead to a delayed discovery of problems, potentially exacerbating their impact and leading to more severe regulatory consequences. The professional decision-making process for similar situations should involve a structured approach. First, identify the discrepancy and its potential implications. Second, gather all supporting documentation and seek clarification from relevant parties. Third, consult internal policies and any applicable regulatory guidelines to understand reporting obligations. Fourth, if the discrepancy cannot be resolved through clarification, escalate the issue to senior management or the compliance department, ensuring all findings are documented. Finally, always prioritize accuracy and transparency in financial reporting, even when faced with business pressures. Question 14. Compliance review shows that Astra Agro Lestari has identified certain intercompany transactions that may not have been recorded in accordance with the full requirements of Indonesian Financial Accounting Standards, SAC, and Otoritas Jasa Keuangan, OJK, disclosure guidelines. The transactions involve the transfer of assets between subsidiaries, and there is a concern that the valuation methods used might not accurately reflect fair value, potentially impacting the consolidated financial statements. Which of the following approaches best addresses this compliance issue for Astra Agro Lestari? Option A. Immediately adjust the accounting records to reflect the perceived fair value of the assets without further consultation to ensure the consolidated statements appear stronger. Option B. Conduct a detailed review of the intercompany transactions, consulting with accounting experts and auditors to determine the correct application of SAC and OJK disclosure requirements, and make necessary adjustments and disclosures. Option C. Reclassify the transactions as non-material and exclude them from the consolidated financial statements to avoid potential scrutiny and reporting complexities. Option D. Seek to obtain retrospective approval from the OJK for the current valuation methods used, rather than making immediate adjustments. The correct answer is A. Immediately adjust the accounting records to reflect the perceived fair value of the assets without further consultation to ensure the consolidated statements appear stronger. Explanation. This scenario presents a professional challenge because Astra Agro Lestari, as a publicly listed company, must adhere to stringent Indonesian financial reporting standards and corporate governance principles. The challenge lies in interpreting and applying these regulations when faced with a situation that could potentially misrepresent the company's financial health or operational performance. Careful judgment is required to ensure transparency, accuracy, and compliance, thereby safeguarding investor confidence and the company's reputation. The correct approach involves a thorough review of Astra Agro Lestari's internal controls and accounting policies against the prevailing Indonesian financial accounting standards, SAC, and the regulations set forth by the Otoritas Jasa Keuangan, OJK. This approach is professionally sound because it prioritizes adherence to established accounting principles and regulatory mandates. Specifically, SAC requires that all material transactions and events be recognized and disclosed in a manner that provides a true and fair view of the company's financial position and performance. The OJK's regulations further emphasize the importance of accurate and timely financial reporting to protect investors. By ensuring that all relevant information is captured and presented according to these standards, Astra Agro Lestari upholds its legal and ethical obligations. An incorrect approach would be to overlook or downplay the significance of the identified discrepancies. For instance, attempting to reclassify the transactions without proper justification or consultation with accounting experts would violate SAC principles of faithful representation and verifiability. Another incorrect approach would be to delay disclosure of the potential misstatement, which contravenes OJK regulations requiring timely reporting of material information. Such actions could lead to regulatory penalties, legal liabilities, and severe damage to Astra Agro Lestari's credibility among stakeholders. Professionals should adopt a decision-making framework that begins with a clear understanding of the relevant regulatory landscape, SAC and OJK regulations in this case. When discrepancies are identified, the process should involve 1. Thorough investigation to understand the nature and impact of the issue. 2. Consultation with internal and external experts, e.g., auditors, legal counsel. 3. Assessment against accounting standards and regulations. 4. Determination of the appropriate accounting treatment and disclosure. And 5. Timely and transparent communication with relevant authorities and stakeholders. This systematic approach ensures that decisions are informed, compliant, and ethically sound. Question 15. The investigation demonstrates that a key witness in an internal inquiry at Astra Agro Lestari has a close personal relationship with one of the individuals being investigated. This relationship was not disclosed by the witness prior to their initial statement. Which of the following is the most appropriate course of action for Astra Agro Lestari's compliance department to ensure the integrity of the investigation? Option A. Immediately disregard the witness's prior statement and exclude them from any further participation in the investigation due to the undisclosed conflict. Option B. Confront the investigated individual about the witness's relationship and instruct them to influence the witness to provide a statement favorable to their case. Option C. Re-interview the witness after formally documenting the undisclosed relationship and assessing its potential impact on their testimony, potentially involving an independent investigator if necessary. Option D. Proceed with the investigation as planned, assuming the witness's testimony is accurate and unbiased despite the undisclosed relationship. Correct answer is C. Re-interview the witness after formally documenting the undisclosed relationship and assessing its potential impact on their testimony, potentially involving an independent investigator if necessary. Explanation. This scenario presents a professional challenge for Astra Agro Lestari's compliance team due to the potential for conflicts of interest and the need to maintain the integrity of internal investigations. The team must navigate the delicate balance between gathering necessary information and ensuring that individuals involved in the investigation are not compromised by their relationships or potential biases. Careful judgment is required to uphold the company's ethical standards and regulatory obligations. The correct approach involves a structured process of identifying potential conflicts of interest and implementing appropriate mitigation strategies, such as recusal or independent oversight, to ensure the investigation's impartiality. This aligns with principles of good corporate governance and ethical conduct, which are implicitly expected in any reputable hiring assessment, and specifically within the context of a company like Astra Agro Lestari operating within a regulated industry. The focus is on preventing any perception or reality of bias that could undermine the investigation's findings or lead to regulatory scrutiny. An incorrect approach of proceeding with the investigation without addressing the identified relationships risks compromising the investigation's credibility. This could lead to accusations of a whitewash or unfair treatment, potentially violating internal company policies on conduct and ethics, and in a broader sense, undermining the principles of due diligence expected in any professional setting. Another incorrect approach of immediately assuming guilt based on relationships, rather than focusing on factual evidence, represents a failure in due process and an ethical breach of natural justice. This prejudges the outcome and deviates from the objective fact-finding required in any investigation. Professionals should employ a decision-making framework that prioritizes objectivity and fairness. This involves a systematic identification of potential conflicts, a clear assessment of their impact on the investigation, and the implementation of predefined protocols for managing such conflicts. This framework should be rooted in the company's code of conduct and any applicable industry best practices, ensuring that all investigations are conducted with the highest standards of integrity and transparency. Question 16. The analysis reveals that Astra Agro Lestari is considering a new agricultural technology aimed at significantly reducing water usage. When evaluating this technology's suitability and potential claims, which approach best aligns with the company's commitment to regulatory compliance and ethical sustainability reporting within the Indonesian context? Option A. Conduct a preliminary assessment of the technology's potential to enhance Astra Agro Lestari's public image as an environmentally conscious company, and proceed with adoption if the public relations benefits are substantial, assuming general compliance with environmental best practices. Option B. Thoroughly review the proposed technology's operational specifications and expected outcomes against Indonesia's specific water resource management regulations and Astra Agro Lestari's internal sustainability performance metrics, seeking expert validation of its environmental claims before any public statements are made. Option C. Focus on the cost-saving aspects of the technology, assuming that any reduction in resource consumption inherently meets regulatory standards without requiring specific verification against Indonesian environmental laws. Option D. Immediately implement the technology across all relevant operations to gain a competitive advantage, deferring detailed regulatory checks until after initial deployment to avoid delaying operational efficiency gains. The correct answer is A. Conduct a preliminary assessment of the technology's potential to enhance Astra Agro Lestari's public image as an environmentally conscious company, and proceed with adoption if the public relations benefits are substantial, assuming general compliance with environmental best practices. Explanation. This scenario presents a professional challenge for an Astra Agro Lestari employee tasked with evaluating a new sustainability initiative. The challenge lies in balancing the potential benefits of the initiative with the company's existing regulatory obligations and ethical commitments. A deep understanding of the relevant regulatory framework is crucial to avoid misrepresenting the initiative's compliance or making unsubstantiated claims. The employee must exercise careful judgment to ensure all assessments are grounded in factual evidence and adhere to the principles of transparency and accuracy. The correct approach involves a thorough review of the proposed initiative against Astra Agro Lestari's established sustainability policies and relevant Indonesian environmental regulations. This approach is correct because it ensures that any claims made about the initiative's impact are verifiable and compliant. Specifically, it aligns with the principles of responsible corporate conduct and regulatory adherence expected of companies operating in Indonesia, such as those outlined by the Ministry of Environment and Forestry, KLHK, concerning environmental impact assessments and sustainable practices. By grounding the evaluation in existing policies and regulations, The employee upholds the company's commitment to transparency and avoids potential legal or reputational risks. An incorrect approach that focuses solely on the potential positive public relations impact without rigorous verification would be professionally unacceptable. This fails to meet the regulatory requirement for accurate reporting and could mislead stakeholders, potentially violating consumer protection laws or environmental disclosure mandates. Another incorrect approach, which dismisses the initiative due to minor deviations from current internal processes without considering the potential for improvement or adaptation, demonstrates a lack of strategic foresight and an unwillingness to embrace innovation within regulatory boundaries. This can stifle progress and lead to missed opportunities for enhanced sustainability performance. Finally, an approach that prioritizes speed of implementation over thorough due diligence, making assumptions about compliance, risks significant regulatory penalties and reputational damage if the initiative is later found to be non-compliant. Professionals should employ a decision-making framework that begins with understanding the core objectives of the initiative and the relevant regulatory landscape. This involves identifying all applicable laws, regulations, and internal policies. Next, a comprehensive assessment of the initiative's alignment with these requirements should be conducted, seeking expert advice if necessary. The evaluation should then focus on factual evidence and verifiable outcomes, rather than speculation or public perception. Finally, decisions should be made with a commitment to transparency, accuracy, and long-term sustainability, ensuring that all actions are defensible from both a regulatory and ethical standpoint. Question 17. The efficiency study reveals that certain operational processes at Astra Agro Lestari are significantly underperforming, leading to increased costs and potential environmental concerns. How should Astra Agro Lestari proceed with communicating these findings internally and externally? Option A. Conduct a thorough internal review to assess the materiality and potential impact of the findings. Consult with legal and compliance teams to determine appropriate disclosure obligations under Indonesian financial regulations, and develop a transparent communication plan for relevant stakeholders. Option B. Delay any external communication regarding the efficiency study's findings until a comprehensive remediation plan is fully implemented and successful. Option C. Share the detailed findings of the efficiency study only with the board of directors and senior management, with no immediate plans for broader internal or external dissemination. Option D. Publicly announce only the positive aspects of the efficiency study to maintain investor confidence, while addressing the underperforming areas internally without immediate external disclosure. Correct answer is A. Conduct a thorough internal review to assess the materiality and potential impact of the findings. Consult with legal and compliance teams to determine appropriate disclosure obligations under Indonesian financial regulations, and develop a transparent communication plan for relevant stakeholders. Explanation. This scenario presents a professional challenge because Astra Agro Lestari, as a publicly listed company, is subject to specific disclosure requirements and ethical obligations regarding its operational efficiency and any potential impacts. The efficiency study's findings, if significant, could influence investor perception, market valuation, and potentially trigger regulatory scrutiny. Therefore, the decision on how to communicate these findings requires careful judgment to ensure compliance with relevant regulations and maintain stakeholder trust. The correct approach involves a comprehensive review of the efficiency study's implications against Astra Agro Lestari's reporting obligations and internal policies. This includes assessing whether the findings constitute material information that requires immediate disclosure to the public and relevant regulatory bodies. The justification for this approach lies in adhering to principles of transparency and timely disclosure, which are fundamental to maintaining market integrity and investor confidence. Specifically, it aligns with the Indonesian Financial Services Authority (AJC) regulations concerning the disclosure of material information by public companies, ensuring that all stakeholders have access to information that could affect investment decisions. This proactive and compliant communication strategy mitigates risks associated with non-disclosure or misleading information. An incorrect approach would be to selectively disclose only the positive aspects of the efficiency study, while omitting or downplaying any negative findings. This failure stems from a lack of transparency and could be construed as misleading the market, violating OJK regulations on fair disclosure, and potentially leading to penalties. Another incorrect approach is to delay the disclosure of the study's findings indefinitely, hoping that the issues will resolve themselves or go unnoticed. This constitutes a breach of the obligation for timely disclosure of material information and can erode investor trust, leading to reputational damage and regulatory sanctions. Finally, an approach that involves internal discussions about the findings without a clear plan for external communication or regulatory notification is also flawed. While internal assessment is necessary, it does not absolve the company of its public disclosure responsibilities if the findings are material. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves establishing clear internal protocols for evaluating the materiality of study findings, consulting with legal and compliance departments, and adhering to established disclosure timelines as mandated by regulatory bodies. The process should be documented thoroughly to demonstrate due diligence and good corporate governance. Question 18. To address the challenge of a potential significant operational disruption at one of its key plantation sites, which could materially impact its financial performance, Astra Agro Lestari is considering how to communicate this development. Which of the following approaches best aligns with the regulatory framework and ethical obligations governing publicly listed companies in Indonesia? Option A. Hold off on any public disclosure until the full extent of the disruption is understood and a recovery plan is firmly in place to avoid causing undue panic. Option B. Immediately consult with the legal and compliance departments to assess the materiality of the information and determine the appropriate disclosure strategy in accordance with OJK regulations before any external communication. Option C. Share the preliminary details of the disruption with a select group of trusted financial analysts to gauge their reaction and potential market impact before making a public announcement. Option D. Disregard the initial reports as preliminary and likely to be resolved internally without significant external impact, and therefore not requiring any formal disclosure at this stage. The correct answer is B. Immediately consult with the legal and compliance departments to assess the materiality of the information and determine the appropriate disclosure strategy in accordance with OJK regulations before any external communication. Explanation. This scenario presents a professional challenge because Astra Agro Lestari, as a publicly listed company, operates under strict disclosure requirements and ethical obligations to its stakeholders. Core of the challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or unfair advantage. The regulatory framework governing such situations emphasizes transparency, fairness, and the prevention of insider trading. Careful judgment is required to ensure that any communication regarding material non-public information is handled in a manner that does not prejudice the market or specific investors. The correct approach involves a structured and compliant process for handling potential material non-public information. This approach prioritizes adherence to the Indonesian Financial Services Authority (AJC) regulations, specifically those pertaining to disclosure of material information and insider trading. By consulting with the legal and compliance departments, Astra Agro Lestari ensures that any communication is reviewed for accuracy, completeness, and compliance with disclosure timelines. This proactive engagement with internal experts is crucial for preventing inadvertent breaches of regulations and maintaining market integrity. The regulatory justification stems from OJK Regulation No. 31/POJ 04/2015 concerning disclosure of material information or facts by issuers or public companies, which mandates prompt and accurate disclosure. Furthermore, OJK Regulation No. 16/POJ 07/2017 concerning prevention and handling of insider trading in the capital market underscores the importance of preventing individuals from trading on material non-public information. An incorrect approach that involves immediately releasing the information to a select group of analysts without prior internal review fails to comply with disclosure regulations. This action could be construed as selective disclosure, providing an unfair advantage to those analysts and their clients, and potentially leading to market manipulation. Such a practice violates the principle of equal access to information for all market participants, a cornerstone of fair capital markets. Another incorrect approach, which is to delay the disclosure indefinitely until a more opportune moment, is also professionally unacceptable. This inaction can lead to a situation where market participants are trading without knowledge of significant developments, thereby undermining market efficiency and fairness. It also exposes Agro Lestari to regulatory scrutiny for failing to meet its disclosure obligations in a timely manner. A third incorrect approach, which is to dismiss the information as insignificant without proper assessment, carries substantial risk. Materiality is a key concept in disclosure, and a misjudgment of what constitutes material information can have severe consequences. A thorough assessment, involving relevant internal departments, is necessary to determine if the information meets the threshold for disclosure under JobConquer regulations. The professional decision-making process for similar situations should involve a clear protocol for identifying, assessing, and disclosing material non-public information. This protocol should include 1. Establishing a clear definition of what constitutes material information within the company's context. 2. Designating responsible personnel to monitor for such information. 3. Implementing a mandatory review process involving legal and compliance departments before any external communication. And 4. Adhering strictly to the disclosure timelines stipulated by the JobConquer. This structured approach ensures that decisions are made based on regulatory requirements and ethical considerations, rather than expediency or potential short-term gains. Question 19. The review process indicates that a procurement officer at Agro Lestari has a close personal friendship with a key executive at a long-standing supplier company. This friendship has recently involved the supplier executive offering the procurement officer's child a significant internship opportunity at the supplier's overseas branch, an opportunity that is highly sought after and would greatly benefit the child's career. The procurement officer is currently involved in evaluating bids for a major contract that this supplier is competing for. What is the most appropriate course of action for the Agro Lestari procurement officer? Option A. Inform the supplier executive that the internship offer creates a conflict of interest and decline it, then proceed with their role in the procurement process as usual. Option B. Downplay the significance of the friendship and the internship offer, continue to participate in the procurement process, and assure their supervisor that their judgment will not be compromised. Option C. Disclose the personal relationship and the internship offer to their supervisor and recuse themselves from all aspects of the current procurement process involving this supplier. Option D. Accept the internship offer for their child, as it is a personal matter unrelated to their professional duties, and continue to participate in the procurement process, ensuring they remain objective. The correct answer is C. Disclose the personal relationship and the internship offer to their supervisor and recuse themselves from all aspects of the current procurement process involving this supplier. Explanation. The review process indicates a potential conflict of interest scenario involving Agro Lestari's procurement department and a supplier. This situation is professionally challenging because it requires a delicate balance between maintaining business relationships and upholding ethical standards and regulatory compliance. The core of the challenge lies in identifying and managing situations where personal interests could improperly influence professional judgment, potentially leading to unfair advantages for certain suppliers or detrimental outcomes for Agro Lestari. Careful judgment is required to distinguish between legitimate business courtesies and actions that cross ethical boundaries or violate company policy and relevant regulations. The correct approach involves a proactive and transparent disclosure of the relationship and recusal from decision-making processes where a conflict might arise. This aligns with principles of good corporate governance and ethical conduct, which are often codified in company policies and may be indirectly supported by broader regulatory frameworks concerning fair business practices and anti-corruption. By disclosing the relationship and stepping aside, the employee demonstrates integrity and ensures that procurement decisions are made impartially, based solely on the merits of the supplier's offerings and the best interests of Agro Lestari. This approach mitigates the risk of actual or perceived impropriety, safeguarding the company's reputation and ensuring compliance with its internal code of conduct and any applicable Indonesian laws related to business ethics and procurement. An incorrect approach of accepting the supplier's offer of a significant personal benefit, such as a substantial gift or an offer of future employment for a family member, represents a direct violation of ethical principles and likely company policy. This action creates a clear conflict of interest, where the employee's personal gain could influence their professional judgment in favor of the supplier, potentially leading to procurement decisions that are not in Astra Agro Lestari's best interest. This could expose the company to risks of inflated prices, substandard quality, or even legal repercussions if it is perceived as engaging in corrupt practices. Another incorrect approach of downplaying the significance of the relationship and continuing to participate in the procurement decision without disclosure is also professionally unacceptable. While not as overt as accepting a gift, this approach still harbors the risk of unconscious bias. The employee might genuinely believe they can remain impartial, but the existence of a personal relationship and the potential for future benefits can subtly sway their judgment. This lack of transparency erodes trust and can lead to decisions that are not objectively made, potentially harming Astra Agro Lestari and violating the spirit of ethical conduct and fair competition. Finally, an incorrect approach of ignoring the situation and hoping it goes unnoticed is negligent and unprofessional. This passive stance fails to address the inherent risk of a conflict of interest and leaves Astra Agro Lestari vulnerable to ethical breaches and reputational damage. It demonstrates a lack of responsibility and a disregard for the company's commitment to integrity and compliance. The professional reasoning process for similar situations should involve a clear understanding of the company's code of conduct and conflict of interest policies. When faced with a potential conflict, an employee should first identify the nature of the relationship and the potential for personal interest to influence professional duties. The next step is to assess the materiality of the relationship and the potential benefit. If a conflict exists or could reasonably be perceived to exist, the employee must err on the side of caution by disclosing the situation to their supervisor or the designated compliance officer, and recusing themselves from any decision-making process related to the supplier in question. This proactive and transparent approach is crucial for maintaining professional integrity and ensuring that Astra Agro Lestari operates ethically and in compliance with all relevant standards. Question 20. What factors determine the appropriateness of accepting gifts or hospitality from suppliers for employees of Astra Agro Lestari, considering ethical business practices and potential conflicts of interest? Option A. A comprehensive assessment of the gift's value, its nature, the frequency of such offers, and the specific context of the business relationship, in line with Astra Agro Lestari's internal policies and relevant ethical guidelines. Option B. The personal relationship an employee has with the supplier, irrespective of the gift's value or potential impact on business decisions. Option C. The immediate perceived benefit to the employee, without considering the broader implications for Astra Agro Lestari's reputation or regulatory compliance. Option D. The assumption that any gift offered by a supplier is a standard business courtesy and therefore acceptable without further scrutiny. The correct answer is A. A comprehensive assessment of the gift's value, its nature, the frequency of such offers, and the specific context of the business relationship, in line with Astra Agro Lestari's internal policies and relevant ethical guidelines. Explanation. Scenario analysis. This scenario presents a professional challenge for Astra Agro Lestari employees regarding the ethical and regulatory implications of accepting gifts from suppliers. The core difficulty lies in balancing normal business courtesies with the potential for undue influence or the appearance of impropriety, which can undermine trust and fair dealing. Employees must exercise sound judgment to navigate these situations, ensuring compliance with internal policies and relevant regulations, and upholding the company's reputation for integrity. Correct approach analysis. The correct approach involves a thorough assessment of the gift's value, its nature, and the context of the business relationship. This aligns with the principles of ethical conduct and good corporate governance, which typically require employees to avoid situations that could create a conflict of interest or compromise their professional judgment. Specifically, it necessitates adherence to Astra Agro Lestari's internal code of conduct and any applicable anti-bribery and corruption laws. By evaluating the gift against established thresholds and seeking guidance when in doubt, employees demonstrate a commitment to transparency and ethical business practices, thereby safeguarding the company's interests and reputation. This proactive and principled stance is crucial for maintaining a fair and competitive business environment. Incorrect approaches analysis. Accepting any gift without consideration of its value or context is professionally unacceptable. This approach disregards the potential for such gifts to create a conflict of interest or the perception of favoritism, which can lead to biased decision-making and damage the company's reputation. It fails to adhere to ethical standards that mandate vigilance against undue influence. Assuming all gifts from suppliers are acceptable simply because they are offered is also a flawed approach. This overlooks the possibility that a supplier might be attempting to gain an unfair advantage through the provision of gifts, potentially leading to decisions that are not in Astra Agro Lestari's best interest. It demonstrates a lack of due diligence and an insufficient understanding of ethical business conduct. Refusing all gifts, regardless of their nominal value or the intent behind them, can also be professionally detrimental. While it errs on the side of caution, it can hinder the development of positive and collaborative supplier relationships, which are essential for business success. Such an approach may be perceived as overly rigid or unappreciative, potentially impacting goodwill and operational efficiency without a clear regulatory or ethical imperative to do so in all instances. Professional reasoning. Professionals at Astra Agro Lestari should adopt a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves 1. Understanding and internalizing Astra Agro Lestari's code of conduct and relevant policies on gifts and hospitality. 2. Evaluating each gift based on its monetary value, nature, and the context of the business relationship. 3. Exercising caution and seeking clarification from supervisors or the compliance department when there is any doubt about the appropriateness of a gift. 4. Maintaining a record of accepted gifts, if required by company policy, to ensure transparency. 5. Prioritizing the company's reputation and the integrity of its business dealings above personal gain or convenience.